Hey everyone, Mike Clark here. I have Tom Biggs with Rickhoff Business and Balance. Tom's been a CPA for 18 years, and he's been with Kurt Rickhoff's firm, Business and Balance, for about 14 years. So one thing that we commonly see, Tom, with our clients is that they've done such an amazing job of saving over the lifetime. You know, they're past the uncomfortable first period of retirement where they don't really know what it's going to look like. Now they've been retired for 10 years and they're just not touching their assets. So if you wouldn't mind talking a little bit about how they can gift assets down to future generations, or really anybody.
So let's just talk about the basics of gifting, right? Yeah. A lot of people think that you gift to essentially create a deduction, okay, or to avoid paying tax on that money. But a lot of people that gift don't realize that it's all about estate tax, okay, and how much you have in assets, whether that's cash or stocks or property. You have to be above a threshold in both the state of Illinois and federal to where that lifetime gift or that annual gift tax exclusion just makes sense, right? So, you know, most people don't have that in their life. You have to be incredibly wealthy to actually see where estate tax comes in play. But you know, it's something you need to be aware of if you feel like you have assets over $5 million for the state of Illinois, or over $20 million. And this isn't the exact number, but a ballpark. You know, and you need to be consulting with your tax advisor on whether or not it makes sense to start getting that asset over to your children or anybody else for that matter, because estate tax is the worst. It's a high rate federally of 40%, and you're paying tax on after-tax money that's earned money.
Double taxation.
Nobody wants to pay that. So we need to gift. We need to be aware that we need to gift in time too as well, because a lot of people, what I see people happens to people a lot is they recognize this at the back end of their life, and they don't have enough time to get it all out. So you need to be doing this when you feel like you're successful in your 30s and your 40s. You need to start doing it now.
Yeah. The other thing that we look at with gifting for clients is obviously the main thing is estate taxes, or avoiding them, I should say.
Yeah.
But also, if you have extreme confidence that you're not going to need all the money that you have, and we always say this kind of as a joke, but there's always a little truth to joke that everybody loves grandma and grandpa a little bit more when grandma and grandpa are buying things, right? Yeah. And really what I mean by that is what typically happens is a client walks in the door, they're 65 years old, or they call and they say, Mike, my mom passed away. You know, we have to deal with the estate. And really it just goes from one dormant bucket to another bucket that is also dormant because they never expected to receive it, and they're retired. It's not life-changing in any way. But if you've set yourself up to where you know you don't need a strong amount of the assets to live your life, gifting money to your kids, to your grandkids, to max out the Roth IRA, which is a window that closes every year, to fund their 529 plan, which, by the way, in the state of Illinois, you get a $20,000 tax deduction for your contribution at the state level, of course. And I believe in Missouri, it's $16,000, right? So and again, those are ways to help them. And sometimes our clients don't want to enable their kids, right?
Sure.
So what we've had is some clients, literally, they bring their children in one by one into a meeting with us. They look them in the eye and they say, Tim, we're going to make contributions to your Roth IRA, your mom and I. We're not promising that we're going to do it every single year. But I'm going to ask for your statement a year from now. And if I've seen that you withdraw money from your Roth IRA, you're going to get it whenever we die, right?
Yeah.
But then secondly, whatever it is you're already contributing to your retirement, I want to see those statements and make sure that you continue to do it, because it's not meant to be it's not meant to be that you're relying upon us to fund your retirement. We're just trying to pass it down in a more tax efficient way.
Yeah.
Does that make sense?
Yeah. Exactly.
Right.
And I think from my client's perspective too, there's always that hesitation. I love my kid. I trust my kid in a lot of things, but when it comes to money, my child, if I give it to them just in the form of a check, who knows what they're going to do with it.
Right.
And this is a great way to do it to where you still kind of have that control, but you really don't.
Yeah, and really what you're trying to do is instill in them the education, the understanding how important it is to save, right?
Yep.
We also have clients who are retired, and they use this opportunity to educate them by matching, right? You're looking at your 32-year-old son who maybe hasn't contributed to the Roth IRA, and you're letting them know that for every dollar that they contribute, you're going to match dollar for dollar up to an amount, right?
Sure.
So we always talk about how we're passing assets down to a future generation, but we're also passing down character and knowledge as well. So to me, it's a great way to pass those things on to the ones that we love.
Yeah, that's great. I agree completely.
So one quick thing is, as always, nothing that I or Tom has discussed today is either investment advice or tax advice, right? We don't know anything about you and your situation. If you have any questions, concerns, thoughts, reach out to us. You know, my office is, our number here is 618-607-4101. You can reach me at 𝗃𝗧@𝗧𝗃@𝗧𝗏-partners.com. And Tom can be reached at 618-806-6551. And his email is TOMB @Rickhoff.com. Thanks and have a great day.